Up, Greg?
Hey, how is it? How are you?
Good.
Okay, let's go over here. Um,
Says he has nothing. Beamer. You may want.
well, that's too bad. I mean, you hate to be that guy.
Hey, we're gonna get him over there. I think we need to maybe send it to his Screed Ads email. How's Lumber World treating you today, Greg?
Uh, so far so good, Ash. I mean, continuing to just it's a grind out there. There's not a lot of I don't see a lot of emotion out there. There's I was kind of thinking of that thing where you go try and look at the things that the things that you think the things that you don't know, and the things you don't know that you don't know. I love making that list, and what I know is that customer inventory, end user inventory, appears to be relatively low.
Well, that's like I said, you and I were talking. That's because the Six Sigma black belts are now running the inventory purchasing from the C-suite.
Right. So, I mean, I guess, and I think, because, hang on, let me turn that down. Because the slowdown has been so well telegraphed, they've gotten things in pretty good control.
Right. We're just waiting for Matt to roll in.
The other thing that I know is that multifamily continues to be substantially better, and that the brunt of the the downturn is in single family.
Well, I mean, like you said, as you know, being a user of the MX platform, along with the people that we see every day, the 100 trucks that went through the last few days was a lot of multifamily job site stuff. And that seems to be the ones that are really that we're seeing a lot of the bids on our platform.
Yeah, and the other thing I think I know is that there's a lot of lumber that is being bought and positioned for jobs that may not be going vertical right away, but because the price levels are so attractive, budgeted, they're getting that lumber in there. Is that stealing some demand from down the road? I don't know. We got Matt?
Possibly. Hey, Matt. How's that sound?
Can you hear me now? We see him.
Hello, can you hear me?
Oh, we go. All right.
You bet. Sound great. You sound great, man. Did you reposition the drum set around?
No, I'm having. It's weird. I can't hear you in my headphones. I don't know why. Let's see. Maybe
you were just beating the drums, man. Maybe you knocked an eardrum loose.
I'm hearing you through my speakers, so I wonder if I can change the audio here. Anyhow, I'll keep talking in the meantime. Yeah, no. So I'm using my actual desktop computer that I own for my business. I'm not using the Hampton stuff because so the last few times I've been trying to get on here, my microphone didn't work right on the Hampton computer. And then today I was trying to join the show, and my video won't work on the Hampton computer. So I just use my own damn computer. I tell you, Hampton's got the greatest computers in the world in their sawmills.
But Matt, we were talking before you got on about what we know and what we don't know going into this week. And Greg was saying that this whole quote unquote downturn was pretty well projected. It was almost like that movie in A Fish Called Wanda where you're the steamrollers coming toward the person a mile away and they can't get out of the way. But even though you see it coming, if you remember that scene, it's like nothing really surprising, yet it's always still surprising when you get here, right?
What is the most surprising thing? What do you think the most
The most-
surprising thing is about the last 90 days, lumber wise?
How much better the liquidity and the business has been than at least my expectations of it were going to be.
I don't know. That's a good question that I don't even know the answer for my own question. Ashley, what are your thoughts on that?
So, I think my biggest takeaway is everybody thought it would be a lot. Everybody built all of the worst case in, and everything is there's still liquidity.
Yeah.
I think you kind of talked on it. The other thing, and maybe Greg and I were talking this morning, is home center business still seems pretty decent, and maybe the fact that nobody wants to leave a 2 point whatever interest rate and they want to fix their house, maybe that's the reason. But I guess our industry has sometimes a propensity to be ultra negative when things are bad and ultra positive when things are good. And I don't it hasn't manifested as bad as I thought it would be. We're still we had our we hit our budget last month, and we're already at our almost at our budget 2 days into this month. So personally, sitting here, I see better business from our standpoint than I've seen before. Now that maybe we're doing a good job getting more people on the platform, but or it may be
I think you should take just it's to the MX team. Kudos to the MX team. That's what you should.
But I mean, I'm seeing buyers come in, job site buyers I've never seen before that have been monitoring prices for the last 4 or 5 months. All of a sudden, now pulling the trigger.
Should you be afraid of buying, $400, $500 lumber, $600 lumber? I mean, we talked about that for the last several months about how lumber's priced itself back into the historic range that we're all comfortable with. I've mocked our industry on this show by claiming that we all want to buy lumber at 1,100 and nobody wants to buy lumber at 400. That's me mocking the industry. But that doesn't seem to be the case lately. It just seems like people are kind of going along to get along. And the one thing that surprised me the most the last 90 days is the when it comes to the single family housing part of the market, that's gotten a lot worse than I thought it was going to be. I didn't think it would be quite as bad as it really got. But the offset of that was the home center business was so much better than we anticipated. We knew it would be better because seasonally you go into September, October, that's kind of prime time for them. But it was even better than we expected. And then the multifamily is phenomenal. So
I mean, I'm trying to get a gauge on single family. How much worse do you think single family can get over the next 3 to 6 months?
In terms of the companies that supply the single family, or in terms of the demand for housing in this country? Like, what part of that are you describing or asking me?
No, I'm saying is what are housing starts going to be for the next what's going to happen to housing starts over the next 3 to 6 months?
I think they're going to go down. I mean, I don't think that housing is solved in a 4 or 5 month period. And those types of housing issues take a year or two to resolve themselves. We just had a 2 years in a row with 20% increases in price of housing. So the average homeowner that's not done anything with their home just picked up a whole bunch of home equity in the last 2 years. We're going to give some of that equity back, right? We're going to start to see price drops. We've already seen price drops. You're going to see more of that. I mean, I can only speak for Portland, but Portland people are dropping their prices left and right to sell houses right now, and real estate's not moving in Portland for various reasons.
Great point, Matt. Like Greg had a good point. We were talking today is what was the last 2 months, just back of the envelope percentage increases in housing values in the last 2 years?
20% a year for the last 2 years. And, like right now, we're probably this year will be up high single digits. You're talking about 50% increase in, that's the average price. That means that, some places high beta, doubled or tripled in value, and then there's other places that haven't gone up as much. I mean, I guess there's three things I'll highlight. One was there was an article in the Wall Street Journal the other day about small markets, the strength of their housing markets. These are places that have, lower than the average price point, kind of second, I'm going to say second, third tier cities, not as a negative, but only talking about size, because I don't want to run down, some really fine communities by saying that they're second and third tier. I'm talking about it in the size standpoint. Places like Knoxville, Tennessee, or Evansville, Indiana, or Sioux City, Iowa. Those places, those markets are still strong because they're so affordable. Okay. Then the other article was about how rents, which had been rising, have now started to adjust in a number of markets. And I was thinking that through, what does that portend for the multifamily over the next 3 to 6 months, as all that pipeline of product gets delivered in certain markets.
We're going, like, we have two competing major currents right now. And I'm talking like big long-term currents. So the big long-term current is population growth in the United States and housing growth in the United States over the last 20 years. We have not built enough housing in this country to keep up with population growth and aging inventory of housing. We haven't. We spent most of the last 10 or 12 years below 1.4 million housing starts. And we need at least 1.4 million housing starts just to kind of keep up with the natural growth in the demand for housing, right? So
that's an interesting, I know that's kind of I say common knowledge, but it's that's always the thing that's said. I always wonder what gets missed in that is how much, does the repair and remodeling market like make up for some of that gap, right?
I mean, I'm looking more at like demographics. So if we just allowed 5 million people into our country because we're not enforcing the border, then where are those 5 million people going to live? Eventually they need a place to live, right? So that's just 5 million. What about the other 370 million people that already live here?
Well, do you know where they're living? They're living on the streets of Portland, Seattle, San Francisco.
No, they're going to be integrated into our country. They're going to become first-generation immigrants, and they're going to have kids, and then their kids are going to become English-speaking Americans. Yeah, and their families are going to integrate with our neighborhoods. We're going to end up needing, these people are going to have to buy a home or rent an apartment somewhere along the way. They're not going to just be homeless immigrants for the next 20 years.
They're actually not homeless right now because they're getting put up in places. So
I'm just saying they're going to become part of our population. And so if we're going to allow that kind of illegal, or whatever you want to call it, not authorized entry into our country, along with the actual legal immigration that we already allow, we're going to still grow as a country. And the United States hasn't taken our population, our reproduction in the United States is still like close to 2, whereas like places like Japan, it's dropped way off. They can't replicate their population growth anymore, right? But we're still kind of keeping up with our replacement here. I forget the name of it, but there's a term where you're still having enough children to keep growing as a population. We're still growing as a population. So we're going to be at 400 million people in this country in a few years. Where are they going to live? They got to live somewhere.
Yep. Yeah. The other thing about this rental article was, highlighting how that there was, because of the increases in a lot of markets, how more people were like living as roommates or like moving back home.
Yep.
Listen, we all know that, when prices go up, that has a negative impact on demand, right?
Right. Yep.
So
yeah. No, hey, Greg, how many homes are free and clear paid for in the United States, mortgage wise?
40% of U.S. homes have no mortgage on them.
Yeah.
And this was the thing that Ash and I were talking about was,
I'm not one of those people.
of all the, of the ones that do have mortgages, now, I don't know, 95% of those have a mortgage that, and I can't believe it why it wouldn't be 100% to have a mortgage well below the current replacement mortgage. So, that's going to be an interesting in terms of what that does to mobility, the move up buyer. Are you going to sell your house that has a 2 3/4% mortgage and buy a house for more money and pay 7.5%? Are you going to do that?
Depends who you are, right? I mean,
it depends also on your circumstances, right?
No,
I mean, if you
there's
just
certain
got a
amount of people that are
divorce,
moving that are going to do that.
yeah, I
right?
mean, if you
Moving
just
for
got a
job.
divorce and you need to find a place to live, well, then you're going to just do what you have to do. Or if you got transferred, or if your kids left for college and you want to sell your house and cash in some chips, you might want to move somewhere else that's warmer. Like you guys know this because you're in a cold climate in Chicago, but a lot of people that they disappear for a couple months, Greg, in the wintertime.
It's beautiful here today, Matt. 70 degrees and sunny. I'd be playing golf if I wasn't on the show.
Oh
well,
man,
it's funny,
45
Matt.
degrees and pouring rain here in Portland for the last 2 weeks.
Mindy and I went and looked at a house this weekend. We just looked because she gets good ideas when we look, she said, right? And we walked through it, and there was 10 other people walking around it. And this person's getting transferred to New York and just wants a bid on the house so they can go to New York because he's already got a job commuting back and forth out there. And you look at something like that and you're like, all right, what's the bid on that? Right? It's because they bought it 3 years ago and are moving now. And it's like, I've been to a handful of open houses in the last few weeks, and I got to tell you, where I live at, there's a ton of people still going through them.
Yeah.
Which is that's a surprising thing to me. I thought there would be nobody unless they're just like me looking, right?
Yep.
I mean, people have made some money here in the last few years on their homes, right? You talk about that.
Well,
that equity that's built up in their home. So the people that are looking at that home, they have some home equity to roll over. That's what it boils down to.
That's a great point. And we were talking about too. There's a lot of still money sloshing around in the economy right now.
There's a lot of money there. Absolutely. How many trillions of dollars did we pump into the economy in the last 2.5 years? Several.
Yeah. Yeah. So let's go back to like boots on the ground. What's going on today with people watching? I'm seeing what you're seeing, Greg, and Matt, maybe what you're seeing too. And we made a comment that the black belt just in time MBAs are the ones telling the buyers that you and I know that have done it their whole life how to buy inventory. We all talk to some of the same people. Some of these people that were buying hundreds of cars, they got to go ask somebody to buy 2 trucks now.
Right.
It almost is a head scratcher to me. I'm like, you have to ask somebody to buy 2 trucks?
Well, I've thought about this a lot, Ashley. And if you think about interest rates again, so think about all the money that's been spent in the last 6 months in acquisitions, right? Now think about the money that's tied up in the inventory of those acquisitions. And now think about what your money costs to borrow against that inventory versus what it cost to borrow a year ago. So if you made all your expansion plans based on 3 and 4% interest rates, and now you're looking at the end of 2022 and interest rates are 7%, and the demand for housing is dropping, for single family housing has dropped, then now what do? You're going to go into cash preservation mode, right? You're like, you've got all this cash outlay that's just costing you more interest every single day. You're not going to go out and spend that kind of money, even though the price of lumber is so cheap, it's actually at investment levels. You're just not. You're just going to go hand to mouth, just in time. If we run out, okay, we'll buy a local truck and pay an extra $100, $1,000 for it. But we're not going to go invest in 40 cars at a whack. And they haven't.
Yeah, there was more liquidity at $1,000 than there is at $400, except your risk reward is a lot different.
Yeah.
So I guess in my takeaway on that change in that outlook for purchasing of inventory, Ash, you and I always talked about this is, supply and demand are always seeking equilibrium, right? They're always trying to find equilibrium, and inventory accumulation and distribution runs like this on top of it in the form of price increase, decrease. And I guess I look at that, I go, well, okay, so unless all of a sudden the demand rises significant, then there's probably going to be not going to be a lot of energy behind having to accumulate any inventory. People will continue to be just-in-time buyers. With, I guess, the question is, and I've already had a number of mills point this out to me very clearly, is, well, winter's coming and there's going to be all sorts of supply issues. To which I reply, really? Huh.
But it doesn't really matter. There will be supply issues because the railroads always manage to screw things up in the wintertime, and that's proven. And I don't think they have any better plan this year, so they'll probably screw it up again. But to Greg's point, who cares? I mean, the industry's like yawning right now, going, and maybe that's a sign of something better to come in the future. Because when we all get complacent, then you're susceptible to a shock, right? And when you're all on the same page and think it's going to go up another $150 tomorrow, then that's when you get the big sell-offs. All these things tend to surprise us in our business, and you have to be cognizant of your complacency. But the bottom line is, I'm a distributor, okay, and I'm not carrying as much inventory going forward as I was the last 2 years, and it's simply math. I don't have as many transactional occurrences on a weekly basis as I used to, and so therefore I'm going to drop my inventory to reflect my weekly sales. If you're used to selling 30, 40, 50 trucks a week, and now you're selling 20 or 25 trucks a week, you need to adjust your inventory levels to match. And that's what is happening in our industry it's been happening since June.
One thing, Matt, you asked about one interesting, I shared this in my write-up I do every morning to the to the MX users. I think it did this week or maybe last week.
Do I not get that? Do I not get your write-up?
I don't
know.
It either.
Does Greg get it? Matt get it?
I haven't seen your write-up.
We're not privy.
I don't like to hear what we talked about regurgitated to me.
Well, I'll tell you what it is. So in the last month, and this is an interesting kind of just fun to hit me the other day. We've had more mills that were saying, no, we don't want to be on your platform, actually sign up now.
Yeah.
And I'm like, are we doing something better? Are we doing something smarter? And I'm like, no, I think the thing is they're just looking for more liquidity in the market. It's as simple as that. And that sign in itself showed me, like just Matt said, is even the mills are out there looking for more liquidity. Yes, they can go find business every day at a price, but they're looking for the best price and the people that are going to pay them quickly, right? I mean, that's just one thing I noticed. I thought I'd throw it out there. We were sitting around here talking about it last night, and I'm like, I don't think I'd read anything into it except there's people looking for more liquidity right now.
And you should continue to see more of that. And to the extent that you're disintermediating a section of the market by like going downstream, the platform is a great way for people to anonymously sell to people that they otherwise might not want to be seen selling to. Did I say that out loud? Oh.
Yeah, well, no,
I just said that out loud.
I think the other thing, Ashley, that is driving that change in behavior is that they've already been told that their contractual commitments for 2023 are going to go down.
Yeah.
Which means they know they're going to have more cash lumber to sell on a day-to-day basis. They also know that they spent the last 2.5 years just being order takers. And it was there was periods of time in 2022 and 2021 where we, the mills, I'm not talking about Hampton in particular, I'm just talking about mills, had to decide who was going to get the lumber that we were going to produce because there was so many people clamoring for that lumber
Yeah.
People were like, "Hey, can we get in line for the next time you run that product?" Like if they missed something. I mean, people were just desperately chasing lumber around. And even though Greg always says high prices, cure themselves, which is true. But he also said there was no shortage of lumber when we
Nope.
had 6-week order files, which was also true. You just had to buy it and pay a high price and wait 6 weeks to get it shipped. You couldn't not buy it. We weren't on allocation, right? Commodity lumber just was expensive and hard to find. It wasn't impossible to find. You could
Right.
still buy it.
And there was nothing, I mean, obviously there were periods of time where there were certain mills that I didn't buy from because they, as we've talked about this whole idea of like, well, somebody wants something and put it on your contract for 4 weeks out, so it artificially takes that wood away and passes the
Right.
pricing power to somebody else. But to your point is, I mean, even when things were 6 weeks out, you could get anything you wanted for quicker shipment also if you were willing to pay the premium that the market dictated.
Right.
There was never a shortage of anything. There was just a question. And as part of what the platform did was allowed, places that had more inventory go to other places that needed that inventory, whether it was an OSB or it was in lumber.
I
And
bought some low grade from Ashley that came out of Wisconsin, some truss yard that you found that had some extra like 2x6/8 laying around that I needed for
some of
whatever
the crazy lanes that like
Yeah.
things shipped in. I mean, yeah, but we're that those I think it's that those.
I have a question for you
We can
guys.
sing the Archie Bunker song. Oh no, we can't.
When we talk about logistics in this country, there's the threat of another rail strike, right? I had a chat with the VP of Transportation at Hampton right before I left the office this morning. That's my beautiful wife. Let me text her. I'll call her back. And he wasn't worried about the rail strike. He thinks that that's going to get handled, which I tend to agree with. Every time we talk about rail strikes in our industry, it seems like they never really last for very long, even if they have them. But then I turned around and I asked him, "Hey," and I'm asking you guys the same question: how concerned are you about this diesel shortage that's being talked about here in the press lately?
The what?
Diesel shortage. There's a acute shortage of diesel, and it's getting worse in the Southeast, according to what I've been reading in the national press here the last 72 hours. Have you heard about it? Have you read about it?
I read about it. I read about it last night.
All I can say is that it has no impact on either the availability or the pricing right now of trucks in the lanes that I ship in.
So you're still able to book freight, no problem, because you do a lot of that Southeast corridor. I don't.
Yeah, I mean, I'm shipping up from the south and down from the north, and
Okay.
I'd say there's no change, and and they're talking about shortage. They're just basically saying, hey, the inventory is not as great as it was, and so the prices of diesel are higher than they normally would be because of that, right? So it's the same kind of thing as you allocate supply. I don't know what now. There's my wife. She's calling me too. Hang on 1 second.
My wife called me right when we started the call.
Something going on in the world that I'm missing?
Yeah, Matt. So, thing on trucking is we've noticed we haul a lot southeast, back west, south to north, south to the Midwest, off the ports in northeast, and I think we're getting much better rates and availability's better. Well, here's one thing: the availability's a lot better, right?
Yeah.
So
And the rates have gone down too, for the most part.
and the rates have gone down since we use a lot of the digital booking platforms, and we're
Right.
on them looking at rates every day and updating ours. I'm like, wow, that lane has really changed in the last 30 days, right?
What happened? What did I miss? What did I miss?
So Matt and I were just talking that okay, I'm not looking at diesel prices yet. I'm just saying the availability of lanes has definitely gotten better.
Yeah, well, it has been getting better for several months, no question about it.
Yeah.
And
yeah,
I mean, I like that trend because you and I and all three of us know how difficult trucking got in the height of the frenzy. It was
Yeah.
just a nightmare there for a while. So I'm happy to see it kind of go back to normal.
And
Then the next question is,
go ahead, Matt. Sorry.
I just want to see what you guys thought about the basis point rate that's coming here in a short period of time from the Fed, because I'm pretty sure they're going to raise it another 50 to 75 basis points.
There's 100% chance that they're going to raise it 75.
Yeah.
100% chance.
Okay, good.
And then the real question is, what they say about what they think they may do in December, but Ash and I were talking before, 75 basis points puts that at 4%. Inflation's still running at 6 and 8%. So, until short-term interest rates are above the inflation rate, money's not tight, right?
Okay.
Which is like what we were talking about. And part of that is the fact that the money supply grew so fast in 2020 and 2021, and it's just now basically kind of leveled off at that higher rate. So that money is still sloshing around. So Ash and I were talking about what's the peak Fed funds going to be, and I said, I would not be surprised if we had Fed funds, somewhere between 5 and 5.5% by the, by somewhere in the first quarter.
So it's going to take a little bit longer then, and that means they're going to keep the brakes on housing, which means eventually this will have an effect on inflation. Eventually this will have an effect on consumer pricing. This will have an effect on home values. This is if they actually pull off what they're trying to pull off, it's going to cause a recession. It's going to exacerbate negative economic realities, right?
Yeah, I mean, I think the biggest question is, do they push things so far that something breaks and makes things really bad versus, just having and part of what I'm looking at is saying, hey, we could be in for the next 12 to 24 months of, more of a kind of a stagflation where growth is slow and, inflation is stays stubbornly high. And what, how does that manifest itself in our business?
When's the last time we experienced stagflation as a nation? 1979 or something? 81, 82?
Yeah,
It's been a while.
They're saying
40 years.
They're saying that Uncle Joe may end up being end up with a worse rep than Jimmy Carter, and you didn't think that was ever really possible.
Yeah, but they'll just blame it on the incoming Republicans, right? That's what'll happen. They'll shift the blame over to whoever's in power for the next 2 years is going to get the blame.
I was just shocked to see the New York Times ripping on Joe. I mean, that's wow. I mean, that's hard. That's tough stuff. Tough stuff. Anyhow, we're veering into that range that we don't want to go to, right?
I never veered. But I did set up my my washing machine to get fixed on November 8th, so my wife has to be at home the whole time.
Ashley, just as a quick aside, did you see that they delayed our property tax bill until after the election this year? Like,
that's awesome. I mean, mine's
funny how they did that.
Mine's not going up 80%. Mine's not going up 80% like it said in my mailer.
Well, that's next year's tax bills. That's the one you get in March. When you get the March bill, that'll be like, what? But
that's a good point. You think about this, all this price escalation, all these houses across the country, especially Texas and all that, where they don't have a state income tax, but they basically get it out of the housing. Everybody is going to get assessed at the high water mark of where those houses traded, and they're going to get their tax bills at all the states and be like, well, my house isn't worth that.
But there's always a lag both ways.
Or is that just me? Is it just me that does that all the time?
Well, I mean, we're just kind
No.
of like we just get screwed on that because we just got reassessed, and you only get reassessed every 3 years. So our next reassessment isn't for 3 more years. So
yeah, and they reassessed it literally like 6 or 7 months ago, right at
the absolute peak.
you couldn't have timed it any better. I mean, sometimes government does things right or hits it at the right time, right?
I mean, I'm not sure that that's what I would characterize as right.
I wouldn't either, but
mean,
all right, well, cool. Hey, just real question. Today in the market, like what you see, Matt, what is the Western spruce market doing? What are the prices there? What are the trends in the U.S. species markets? You know, I'm wondering what
Well,
people
you know,
are.
Weyerhaeuser settled their strike with the union, so they're back, logging again, and they're back running their sawmills again. But it's going to probably take 3 to 5 weeks for them to really sort out all the shrapnel that shutdowns, the hard shutdowns actually caused. So the dry Doug fir and the green Doug fir markets on the West Coast are going to go through a transition because they just got inflated, right? They just had a 2-month period of inflation based on supply shock. So we're going to go probably a little lower in the long run on Doug fir, green and dry. I think you'll see mills starting to compete a lot more for orders as we go through November. The whitewood species, your spruce and your hem fir and your WW and all the stuff that gets traded not on the West Coast but everywhere else, it's already cheap, and it never really went up in the last 2 months. It's just kind of gone sideways, if not down. So I still feel like as a lumber trader that my daily chances at business are lower than they were 60 days ago, but my success rate is higher, if that makes sense. And so even though I'm paring down my investment in inventory, I'm still relatively busy. And it seems like my customers don't have any fear over these types of prices right now. Most of the quibbling I get is on ship time and tally. So pricing isn't really a big objection these days. I mean, you get into these negotiations with people, and there's 3 things that really matters: price, ship time, tally, right? And
I think ship time is bigger. I think it's right now. It's ship time, tally, and price is almost the order right now.
I just think trading is trading. Like if you've been in this business for more than 10 years, right now is normal. It's totally normal. There's nothing abnormal about it. You can get your lumber relatively easily. You don't have to pay that much for it. You don't have to wait that long to get it. So at least when it comes to spruce and hem fir and whitewood, whatever you want to call that. And so the customers are probably going to continue, like Greg said, this just-in-time strategy, and they'll be nimble. Maybe at some point they'll decide they want to invest into the first quarter. I haven't seen that yet, but we'll see. We'll see how we typically November and December are pretty good for me historically, have been.
How about the eastern spruce side, Greg, in that world you live in over there?
Well, I mean, the 2 things that I was looking at is historical relationship of eastern spruce to western spruce. I feel like a lot of the eastern products have been trading relatively high and have some more room to come down, with the possible exception of, low grade. And you talk about a market that has just been really hammered. And Matt and I talked about it last week in terms of what the spread is. I mean, you're as wide a spread as you get, and a lot of times the spreads between high grade and low grade, those really wide spreads happen at high overall prices, because there's kind of like a cap on the low grade. But I mean, that low grade is as low as it is relative to high grade right now. There's 2 things. One is there's basis opportunity, right? So anyone that trades in number 3 should be buying number 3 and selling the board. That's number 1. But I guess my other part of that question is, what is that telling me? What is that telling me? When it's like that? Is there something that I should be? Is there something I should be getting out of that? Because when relationships are out of whack, they're usually giving you signals about the market.
Well, one thing in this market, when it's down this low, it certainly is hurting the mill net, obviously, right? Because for a while there, when you were getting number 3 prices or utility damn close to the on grade, it was a great return, and all of a sudden, that happened, right?
It's 2 before number 3 printed 275, and a week ago the board was at 530.
Right.
So you had a $265 spread on 2 and better versus number 3, and that's unprecedented. That's never happened in my career. You and I did a swap years ago, 10 years ago. I think the spread at the time was like $60.
Yep, that's right.
And historically, just from my top of my head math, I'd say the average spread between 2 before number 2 and 2 before number 3 Western spruce is about 60, maybe 70. Yeah. Sometimes it goes out to 100, 110. Anything above that is unprecedented. Well, we're at 265. 265 a week ago. Even today, it's 100. What's the latest trade is 450, let's say. So it's $175 spread right now after an $80 sell-off. It's still a high spread. I think what that tells you is the mills got complacent and they just pumped out a bunch of number 3 because they could sell the number 3 for a 4-digit number back in, April, May, June. And now they're going to put the brakes on 2 before production, and they're probably start producing more 2 by 6. And you'll see less 2 before number 3 being produced in the next 90 days than what you just saw the last 90 days. It's what I think is going to happen.
What is the low grade on the pine? Because down in Texas, that 2x4 Southern Yellow Pine number 3 competes against. For some people just want spruce. Is that a good basis opportunity also on the pine side of things?
It all is.
No, it's not. It's because it's actually low grade pine is relatively overvalued historically, and when you think about on a delivered price basis, it's a premium to spruce.
So the perfect trade is to buy the 2x4 spruce and forward sell the 2x4 number 3 pine.
Stop it. You can't, you can only put a little bit of that stuff out, Ash. You can't give it all away. Come on, man.
That's the beautiful
trade. I'll explain.
You...
There's one other thing that's going on in the market right now, which is really unnatural, and I haven't seen it since the early 2000s, maybe the late 90s, back when Simpson Timber used to auction off all their hemlock. Remember those days?
Yep.
Right now, Western hemlock, whether it's coming out of Darrington or Tillamook or Warrenton, our mills that produce it, is trading anywhere from $50 to $100 below what spruce is going for. And print is irrelevant. Random Lengths print on Western Hem Fir on 2 before is completely off. They're living in la land. We're not getting orders anywhere near print. So if you guys that buy spruce that watch this show want to save $50 to $100 1,000 and just switch species, it's winter time. The odds that you're going to get a bunch of coastal hemlock twisting and you're worried about the appearance and behavior of that lumber coming into your yard in the middle of winter, don't worry. Just take advantage of the value that is being given to you, because hemlock has been trading at par with spruce for the last 10 years. Really, for the most part, they've been trading within like a $20 window of each other for the longest time, and all of a sudden, there's a big spread that's developed.
Isn't that deliverable on the contract now?
It's supposedly,
dude. Look at
there's a big basis opportunity right there.
I'm just saying.
What is the delivered price of 2x4 hem to Chicago right now, Matt?
We're asking $550. You got orders?
And
come see me, buddy. Come see me. Call me after the show.
$550. And what's the board delivered Chicago right now?
About that.
Hang on.
About $565. Or I don't know what the mini contract is.
I'm gonna pull up the new contract right now. Hang on 1 second. Quotes. Yeah, new contract for no, that's not the right one. Stand by.
Standing by.
Standing by. Boom. Jan 2023, 560. 560 bid. No, 555 bid, 579 offered. Okay. So, yeah, there you go. I don't know. Let me see if I got November. Quotes.
So, but I'm just asking if Hemlock is deliverable. There may be a play there.
Yeah, it's for sure. You could pick up probably $50 right now if you wanted to be a hard buyer on 2 before hem fir. I bet you could buy 520 to 530 Chicago. And I don't know. I mean, Prince 470 on Western Spruce right now, which is 580 Chicago random lengths print.
Yeah.
So there's $50 that you could put in your pocket if you're willing to. It's just not normally like that, right? It's unnatural for hem fir to be this much cheaper, and it's simply because during the last 30 to 45 days, there's been a lot of hem fir logs that got sold in the West Coast. They were really cheap, and so mills bought those logs because they were way cheaper than Doug fir logs, and they just said, "Yeah, let's just run them." Well, if they'd have known that Weyerhaeuser was going to strike, they probably wouldn't have done that, right? We would have seen a lot more Doug fir production, but they didn't. So the market's clamoring for Doug fir lately, not hem fir, and it's fallen on deaf ears. Same thing with 2x12 hem fir. Look at that compared to 2x12 Doug fir. It's like half price. 2x12 Doug fir sells for $1,200. You can buy 2x12 hem fir for $600. So some weird things out there.
Yeah, no, that's interesting, Matt. That's some great feedback. That got the head spinning on some stuff here.
We need to end the call now. No.
Yeah.
Yeah, I'm gonna go jam out of my drum sets. I'll see you guys later.
All right, hey, wait, before we go, what are we doing next week? We got NOLA Traders Market down in Phoenix. I'll be there.
I'll be here.
You'll be there, and
I'll be here.
Ash, your TBA.
I'm to be announced if I'm going down there or not. We'll see.
All right. Yeah. So I mean, I'm out for Wednesday. So if you're down there, Ash, we'll figure out what we do from there, or maybe we'll skip the week, right?
Yeah, that sounds good. Thank you guys again. Thanks everybody for watching, and we'll talk to you soon. All right.
See you guys.
Boys.
Yep.